Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Global markets are digesting a seismic shift in corporate capital allocation and a surprising resilience in the US economy. The narrative is no longer just about AI adoption, it is about the staggering cost of maintaining it. Meta's stock plunged 10% this morning, shedding billions in market value after the tech giant announced a staggering $145 billion capital expenditure forecast for 2026. While first-quarter earnings beat estimates, JP Morgan swiftly downgraded the shares, citing unsustainable AI infrastructure costs. The market is pricing in a reality check, growth is expensive, and margins are under pressure. Meanwhile, the digital economy is expanding rapidly in emerging markets. The Philippines' digital sector hit 9.8% of national GDP in 2025, reaching 2.74 trillion pesos. This surge, driven by e-commerce and ICT infrastructure, highlights a critical divergence. While US giants struggle with Capex, emerging markets are seeing structural digital adoption accelerate. In the crypto space, institutional legitimacy is being cemented in Miami. HederaCon 2026 features Patrick Witt from the White House Crypto Council, signaling deepening government engagement with tokenization and stablecoin adoption. Yet, on-chain data tells a different story for retail participants. Everdawn Labs reveals that 99.2% of USDT0 holders are retail investors, with a velocity of 21.7x, challenging the narrative that stablecoins are primarily an institutional tool. This retail dominance suggests liquidity is flowing differently than traditional finance models predict. Corporate strategy is also pivoting aggressively. Zoom is deploying its $8 billion cash reserve to fuel an AI-first strategy. CMO Kimberly Storen has led a SWAT team to combat visibility shifts against ChatGPT, marking a direct war for enterprise attention and data dominance. On the macro front, the economic data released today confirms that the US economy is not slowing as feared. At 12:30 Universal Time Coordinated, the US GDP growth rate QoQ advanced came in at 2%, significantly beating the 1.8% forecast and improving from the previous 0.5%. Personal income rose 0.6% versus 0.4% expected, while personal spending jumped 0.9% against 0.7%. Crucially, the core PCE price index held steady at 0.3%, keeping inflation fears at bay. Simultaneously, the ECB held rates steady at 2.15% at 12:15 Universal Time Coordinated, matching forecasts. However, the divergence between US growth and European stagnation is widening. In Japan, consumer confidence dipped to 32.2 from 33.3, while Mexico's GDP growth slowed sharply to 0.1% from 1.8%. Looking ahead, the ISM manufacturing PMI for the US is forecast at 52.5, testing whether this growth momentum can sustain through the industrial sector. The key takeaway is clear: US consumers and GDP are holding firm, but corporate balance sheets, particularly in tech, are facing intense scrutiny over future spending. That's your market briefing. Follow Rumour with AI for daily market intelligence.